Hi everybody, welcome to this week's episode with Noel. Today we have an exciting guest, man. I'm really excited to have her here today. She's going to give us a lot of insight behind the accounting side, because most of us as property investors, especially if you're thinking of just managing the money yourself and not opening up your team, we end up paying a lot in terms of our taxes. So today we have Sizile to tell us more about accounting.
Hello.
I mean, we only met once. I was having a conversation with Lebo. It was during a hike. And then she was speaking about accounting. And she spoke about side hustle. And also she'll tell you more about that. Right? And immediately when she stood up, I went to Lebo and I was like, Lebo, we need to speak to Susan. So today, here we are. It's the second time that we're actually meeting up. However, formally, this is the first time.
Yes.
Susan, thanks for actually accepting the invitation, and we appreciate you.
Thank you so much for having me. And it's good to hear good as Nazi, morning born, and you're like, we need to have that one. Exciting. I'm very, very excited to be here and to have the conversation.
So that it's not an inside joke, right? Can you please just tell us more about the side hustle? That
was not an inside joke. So what I said was, please make sure that, because most people, mabaqala business, they start with 9 to 5s and they're trying to push something on the side. And we usually refer to it as a side hustle. Your business is the side hustle. So I said, let us stop calling our businesses side hustle and call it the main, and then you call your 9 to 5 the side hustle. So my 9 to 5 would say, I'm going to my side hustle. When you go to your business, you're like, I'm going to my main job, That's that.
No, for sure. There's going straight into it. I mean, when it comes to accounting, right, an accountant,
yes,
especially as not only property investors, however, a lot of us that are pushing the main. I wanted to be very strategic in terms of my word.
Please.
What would happen is that I'm afraid to actually reach out to our citizens in terms of accounting. Why would you say that is the case? Because even the conversation that we had, I'm not sure was it the day after, whereby you were like, it's a seasonal type of business, and we want to change this in terms of making it a reality of a daily basis, whereby I'm religiously practicing this and I'm able to invest in my business. Why would you say that is the case?
So I think it's very important to have an accounting person or a finance person, financial advisor, accountant, whatever it may be. But I think most businesses are scared of coming to us, accountants, because they say we are expensive. But when you look at the return on investment, I'll call it an investment, because what we do is we take care of your books, we take care of your finances. We are able to estimate your cash flow. We are able to warn you, isn't here, right? But people avoid that, and they come back when they want you to recover what has already been lost. So basically they come back and they want you to work miracles, because now I've lost 100,000 rands and I need to recover it. How do I recover it? How do I fix this? And I'm like, no, but you were supposed to do that. You were supposed to take care of it throughout the whole year so that we don't have this problem at the end and we're trying to now fix it at one go in bulk. You understand? It's too late to do it then, especially with taxes, because people don't consult with you. They don't come to you for taxes throughout the year, and they make mistakes. They don't know what they need to, save, or not save per se, but put safely, for when the tax season comes. And then my figure tax season, I'm like, okay, you did this. Did you keep the receipt or, whatever documentation that was involved throughout the whole process? No, Nilashil. Okay, how do you want me to help you at the end? It's too late, you understand? So it's because we are expensive, apparently, but it's an investment. It's an investment.
On my side, the thing that I always console myself, especially looking at an accountant, is that would I rather pay Usizindle? Let's say if she's charging 5,000, would I rather pay that 5,000, or would I rather pay 20,000 to SARS?
Thank you. Yes.
So as hard as it is,
yes,
but I'd rather pay Usizindle, man.
Right?
I'd rather pay Usizindle. Yeah.
Right? No, I agree.
But then, Sizindle, I want us to touch base on something, because I've noticed also in terms of how other people work. So how other people would work is that they are not proactive
Yes.
towards how can I structure everything. So it's more of I want to consult an accountant again when it's seasoned
Yes.
for when it's the season for filing, and I'm not necessarily consulting you in terms of season. It's a new year now. I paid 100K last year. How can we go about minimizing it? How can we structure it? Is that something that you also for when it comes to proactive planning, or are you more of, "Hi guys, I'll see you season
Next year. So I think you're right. It's nice to be proactive because you somewhat have control of what will happen in the current year and how the current year may go. You know, okay, obviously there are unforeseen circumstances that we come across as people, or as businesses rather. But at least when we've forecasted it, so in accounting we call it forecasting. When you forecast it, it's manageable.
Yeah.
It's more manageable. It's okay, we're losing it here. We need to cut on 1, 2, 3, 4, 5 so that we can get back in alignment, type of thing. So it's very important. So I try to because you reach out to clients as well and you're like, how's the business going? What's happening? Where you at? You know, I'll come back to you. I'll set up a meeting. Gone. And then they come back, you know, when it's rush and then you need to perform miracles. They say when you can't perform the miracle, it's like they don't work and I'm paying so much, you know. So that's why I said at the hike that accountants and financial advisors are not magicians, but we give you information and you decide what you want to do with it. I can't force you. You understand? Yeah.
Or we only come back when we get that SMS from South.
Yeah. Or when ubone ukuthi hayi balance seyehlile, okay, how can I budget? Now you want to budget because now you're on a minus. No, it doesn't work like that.
I wanted us to really go deeper in terms of SME
Yes.
and your normal business. Now, with property investing, I'm assuming that a lot of people really like structuring it or putting their properties under their businesses, right? Now, there are pros and cons of having a business registered as a business and also SME, right?
Yes.
Is there a difference between the two?
Because an SME is still a business.
Okay.
But there's a criteria to qualify as an SME, right? And there's a criteria to qualify as a business. So we look at your number of employees. An SME would have 250 or less, where a business is 250. You can go 250 and more than 250 employees. Turnover in an SME, it's capped at 14 million, whereas with the business you can turn over way more than that, you understand? So I think it's the small things, but they're all businesses at the end of the day. And another thing with SMEs is if you register and declare your business gets declared as an SME, you get some sort of relief in terms of taxation. So it's not as high as what you would pay for a business. So I usually say the SME is like a closed corporation, but we don't use closed corporations anymore. But an SME is similar to that, where we know it's a small business. We're not going to strain the small business with tax and all these nitty-gritty things in finance. Whereas good business, then we charge them the normal rate. When you go to an accountant, you're sort of looking for somebody who's for guidance, let's call it that. You because I've got this money or I've got this business and this is what I'm making, guide me on how to make more or how to save. So the aim is for us to help you save. The aim is for us to help you make more.
So I remember where these questions come from, it's the workshops that we posted. So I remember one gent was like, guys, what happens if at least when I'm collecting the money, it comes from straight? I go knock, I get it, and then at least I'm running away. Like,
oh gosh.
So we were like, so at least I'm not paying tax. So we were like, brother, but do you know that? Let's just say that I'm collecting 7,000.
Yes.
And then I'm collecting it for. Okay, I use the bed. Let me use 1,000.
Yes.
1,000. I don't need a calculator.
Yes.
1,000 times 12 months. So that whole year I collected 12,000. So my gross was 12,000. Right? Now, when I'm considering my other expenses, of course, because when you're a property investor, you also have expenses.
Yeah.
So let's just say your expenses were $700 a month. So of course, it left with another wrong one. Let's just do 500. 500 times 12 again, and and then you subtract your income from your expenses, and then you see that, but I'm not supposed to be running away from SARS.
Yeah, you're right. And just to say, please don't avoid tax, because that is a finable offense. Once you turn property into a rental property, it's important to declare to SARS that this is rental, right? And I know usually people say, how will SARS find out? Like you were saying, I'll take it in your back door.
Yeah.
How will SARS find out? Chances are they won't, but they might, because SARS has access to your bank, and banks can declare to SARS, there's something happening here and it comes in every month, maybe look into it, you know? So it's important that you declare it. But again, firstly, there's no control of that transaction happening, you know? Should anything go wrong, it's not traceable. You can't account for it, you can't fight for it. If that person comes tomorrow and says, how I gave you 7,000 the other day, how do you trace it? It's a loss. There's a risk of loss. It's a risk to you as a business to do that, you know, where you think you're winning. And with SARS, when you declare, Uguti, this is a rental property, obviously it's then seen as a rental income, but you can also claim for expenses. And I think a lot of people don't know that you can claim for the electricity you pay, you can claim for the water, you can claim, you know, for the levies that you pay. But if you avoid, so if you avoid it, you can't claim, you understand? Because that is expenditure that is subtracted from what? From the income that you have in your business, right? So we subtract it from that, which means you go to a lower tax bracket because there's more expenses that we're deducting from your income, basically. So it is a win-win situation because SARS, you pay SARS, but you can also get back from SARS.
So if my income was 12,000 and then I find out that my expenses is 6,000, and then I can see on an annual basis I'm only netting 6,000. So with what you just said is that I can still claim more because now there might be that possibility I'm still below the threshold and I can still claim.
100%.
So again, you are investing in your business when you're getting an accountant.
100%. That is exactly it.
And also, looking at it from a business perspective, right? I'm sure that people that are watching this, especially if you're investing in yourself, you're not just buying one property to just own one property and collect 1,000. You want to grow your portfolio. And in growing your portfolio, if you're going to be asking for a loan from a bank and you're just keeping your money one side, it becomes hard for you to justify that I'm actually getting rental income, right?
Yes. And I think it's, I don't know how to put it, but it is what you're saying, because when you get a loan, you can't say, there's more coming in, because you're doing it on the side, it's under the table. You can't account for it. You can't, there's no trace of it. It's as if it's non-existent. We don't know of it. So you can't claim it, you can't put it anywhere. We can't say he's making money. For a bank, actually, it looks like there's more, because you owe them, obviously. There's nothing coming in. And you know, when they see something coming in through the bank, it's like, okay, this person une credit loan because le mali iyapuma uyabhadala this loan off, but it's still coming back because this person is getting an income from whatever source that they're getting income from. So I think taking cash is more risk. It's the most risky year, if that's even English. It's the riskier option for collection. We might think we're saving, but it's like shooting yourself in the foot, to be quite honest.
I think you're massaging the hope. You're not saving.
You're not saving?
I mean, you mentioned it when from the start.
100%.
Investing in yourself. Lebo mentioned in terms of what did you just say now? What did you say?
I was saying that scalability, it hurts your scalability.
It hurts,
your scalability.
100%.
And I was looking at it, it's just that I wanted to hold on to my point. My interest rates now. Because now, the more I'm actually showing that I'm paying these guys, that helps my business to get an interest rate.
Yes.
And then ultimately I can benefit from them.
You are
so us getting a mattress here, not even king size, triple king size, but we know it's money there.
Yes.
It's not really assisting us.
No, 100%. But people feel if it goes through the bank is winning and all of that. But if you're still building, you know, obviously a business is a continuous process where you're constantly building. Like, rather use the bank because, like you said, interest. When you want to go and invest or take money, like he was saying, you're credible. Your credit score makes sense. We can see that, no, you're able to afford this. You understand? Your interests are lowered, multata, whatever asset. So, no, you're right. You are right. You are not gaining.
The worst things that people, especially with businesses, do, according to your experience, what is it?
Financially?
Yeah.
The ones that you've seen,
I think it's a person going, and we're having this conversation, a person going into business and expecting to see the profitability now, right? And when you see that 10,000 Rand come in extra, and then I feel like I'm rich. I can go get that weave, I can go get that bag, I can go get that, and then you splurge it. Not looking or thinking that I need to reinvest this so that it can grow. I mean, you need to keep growing, right? You don't want to stay at making 10,000 every month. It needs to be more. So I think when a person sees an ounce of profit, then they want to go blow it without reinvesting it. One of the big mistakes that we make. And I think also, like you guys said, not having any structure or accountability partners who you can talk to and who can advise. And by partners, I don't mean get a family or a family member or friend, an accountant, a lawyer, a property advisor like yourselves. You need that person who's going to guide you in terms of where do I go? How do I go? Because remember, in our business, we're emotional. It's your baby. So you make emotional decisions when you handle your business. So I would be more conscious to say, no, that's not going to work. We're not going there because there's no emotion attached to it on my side, but it's just, I want you to win type of thing. When you guys also advise people, I believe you guys advise them in the sense that we want you to succeed in this property thing. And you're probably emotional because there's a lot of emotional attachment to it type of thing.